Susan is 74 years old. She lives in a small town outside Des Moines, Iowa. Here. Like millions of retirees, she checks her mailbox almost every day. Most of what arrives is predictable. Bills, advertisements, medical statements, insurance notices, nothing particularly surprising. Then, one afternoon, she opens a letter from her Medicare Advantage plan. At first, she assumes it's another routine update. Maybe a premium adjustment, maybe a prescription drug change, maybe an annual notice she can skim through and file away. Instead, she reads something she never expected. Her Medicare Advantage plan is being terminated, not modified, not renamed, not merged, terminated, gone. The coverage she has relied on for years will no longer exist, and no replacement plan is being automatically selected for her. She must choose a new plan herself. She must compare options. She must evaluate networks. She must verify her doctors. She must review prescription coverage, and she must do it within a limited period of time. What Susan doesn't know at that moment is that this termination has also triggered one of the most valuable rights available under Medicare, a right that many beneficiaries spend years wishing they had, a right that could save thousands of dollars in future healthcare expenses, a right that many seniors never discover until it's too late. And Susan is not alone. Far from it. In 2026, approximately 2.6 million Americans received notices that their Medicare Advantage plan was being terminated, not next decade, not sometime in the future, this year. Today, we're going to explain why this happened, what it means for the Medicare market, why insurers are pulling back, and most importantly, the little-known legal protection that many affected seniors can use right now. Because understanding this right could make a significant difference in your healthcare options and retirement finances. I'm Michael Bennett. This is Retirement Watch, helping seniors understand their benefits. Let's get started. Before we talk about why millions of plans disappeared, we need to understand what Medicare Advantage actually is, because many Americans hear terms like Medicare Advantage, Part C, Original Medicare, Medigap, and Part D, and assume they're all basically the same thing. They're not. Original Medicare consists primarily of Part A and Part B. Part A generally covers hospital services. Part B generally covers outpatient services such as doctor visits, preventive care, and medical treatment. Together, Parts A and B form what most people think of as traditional Medicare. But Original Medicare has gaps, deductibles, coinsurance, copayments, out-of-pocket exposure. That's where additional coverage often enters the picture. Some retirees purchase Medigap insurance, others enroll in Medicare Advantage. Medicare Advantage, also called Medicare Part C, is offered through private insurance companies approved by Medicare. Instead of receiving benefits directly through Original Medicare, beneficiaries receive coverage through a private insurer. Many Medicare Advantage plans include additional benefits: dental coverage, vision coverage, hearing benefits, fitness programs, prescription drug coverage, and, in some cases, lower monthly costs. For many retirees, these plans are attractive, particularly for individuals living on fixed incomes. If someone can obtain additional benefits while keeping monthly costs manageable, the value proposition can appear compelling. And for years, millions of Americans agreed. The growth of Medicare Advantage has been one of the biggest stories in American healthcare. 2 decades ago, Medicare Advantage represented a relatively small portion of the Medicare population. Today, it has become the dominant form of Medicare coverage for many Americans. In 2025, more than 34 4 million Medicare beneficiaries were enrolled in Medicare Advantage plans. That represented approximately 54% of all Medicare beneficiaries. Think about that. More than half of all Medicare beneficiaries had chosen private Medicare Advantage coverage. That level of adoption didn't happen by accident. It happened because millions of seniors believed these plans offered meaningful value, and in many cases, they did. Beneficiaries liked having prescription drug coverage built into the plan. They liked additional benefits. They liked predictable structures. They liked convenience. Insurance companies liked the market as well. Medicare Advantage became one of the fastest growing segments of the healthcare industry. Large insurers aggressively expanded. New plans entered new counties. Competition increased. Enrollment grew year after year. For more than a decade, the trend moved in one direction, upward. More plans, more counties, more enrollment, more beneficiaries, which is precisely why what happened in 2026 is so significant. Because for the first time in years, the trend reversed, and not by a little, by a lot. According to official market analyses, approximately 2.6 million Medicare Advantage beneficiaries were enrolled in plans that were terminated for 2026. That's roughly double the number affected the year before. Think about the scale of that. 2,600,000 people. If those beneficiaries formed a city, it would be one of the largest cities in America. Every one of those individuals had to make decisions, find alternatives, evaluate new options, review coverage, potentially change doctors, potentially change pharmacies, potentially change prescription coverage, and many of them didn't fully understand their rights. The terminations were not isolated incidents. They reflected something much larger happening inside the Medicare Advantage market. Major insurers were pulling back. UnitedHealthcare, the largest Medicare Advantage insurer in America, exited hundreds of counties. Humana, the second largest player, also reduced its footprint significantly. Other companies left the market entirely. Others merged. Others reduced offerings. Collectively, these decisions produced the largest Medicare Advantage contraction since the Affordable Care Act era began. That is not a routine adjustment. That is a market event. And whenever a market changes this dramatically, retirees should pay attention, because market changes usually mean one thing. Something fundamental is happening beneath the surface. To understand why insurers are retreating, let's think about this from a business perspective. Insurance companies are not charities. They are businesses. They collect premiums. They receive government payments. They pay medical claims. And they attempt to earn profits. When the financial equation works, companies expand. When the equation becomes less attractive, companies pull back. That is true in virtually every industry. Healthcare is no different. For years, Medicare Advantage was viewed as an attractive business. Enrollment grew. Government support remained substantial. Companies expanded aggressively. But beginning in recent years, several pressures began building simultaneously. Healthcare costs increased. Prescription drug costs increased. Regulatory requirements increased. Certain government payment structures changed. The cost of providing benefits became more expensive. And eventually, some insurers concluded the circuits were no longer profitable enough to justify continued participation, particularly rural markets. Why rural markets? Because population density matters. Imagine an insurer serving 100,000 beneficiaries concentrated within a major metropolitan area. Administrative costs can be spread efficiently. Networks can be organized efficiently. Healthcare providers are concentrated. Now imagine serving a much smaller population scattered across dozens of rural counties. Costs often increase. Networks become more difficult to maintain. Healthcare access becomes more complex. Profit margins shrink. When insurers evaluate where to reduce exposure, rural markets often become vulnerable. And unfortunately, rural beneficiaries often have fewer alternatives available. That reality becomes important later in the story because rural beneficiaries are among those most affected by the current market contraction. Now, here's where things become particularly important. Most media coverage stopped at the plan terminations. The headlines focused on the cancellations, the exits, the contraction, the market changes. But that's not the most important part of the story. The most important part is what those terminations unlock. Because when a Medicare Advantage plan is terminated, affected beneficiaries receive special rights that many Medicare beneficiaries do not normally have. Most people never hear about these rights. Many never use them. Some discover them only after the deadline has expired. And that can be a very expensive mistake. To understand why, we need to talk about Medigap. And once you understand how Medigap works, you'll understand why some experts consider this one of the most valuable enrollment opportunities a Medicare beneficiary can receive. We'll explain exactly how that works next. At this point, many retirees watching may be thinking, okay, I understand that plans are being terminated. I understand that insurers are leaving certain markets. But why is that such a big deal? The answer is simple, because most beneficiaries focus on what they are losing. Very few understand what they may be gaining. And in some cases, the opportunity created by a plan termination may be more valuable than the plan itself. To understand why, let's talk about something called Medigap. If you've been enrolled in Medicare Advantage for years, you may have heard the term before. You may even have ignored it. Many people do. After all, when you're satisfied with your current coverage, why spend time learning about an alternative? But this is one of those situations where understanding the alternative matters. Potentially a lot. Imagine two retirees. Both are 76 years old. Both are enrolled in Medicare. Both have diabetes. Both have heart disease. Both visit multiple specialists each year. Both take several prescription medications, but they have different types of coverage. The first retiree is enrolled in a Medicare Advantage plan. The second has original Medicare combined with a Medigap policy. When they visit doctors, receive treatments, undergo tests, or require hospitalization, their experience can be very different. Why? Because original Medicare generally leaves certain costs uncovered. Deductibles, co-insurance, co-payments. These expenses can add up quickly. A Medigap policy exists specifically to help fill many of those gaps. That is why the name is Medigap. It literally helps cover some of the gaps left behind by original Medicare. For many retirees, this creates greater predictability. Predictability matters in retirement. Most people can handle expected expenses. What creates anxiety is uncertainty, unexpected bills, unexpected procedures, unexpected healthcare costs. A strong Medigap policy can help reduce some of that uncertainty. And for retirees managing multiple health conditions, that predictability can be extremely valuable. Now, here's where the story becomes interesting. Many retirees assume they can simply purchase a Medigap plan whenever they want. In reality, that's often not true. And this is the part many Americans never learn until it's too late. When you first become eligible for Medicare, you generally enter what is known as your Medigap open enrollment period. During that window, insurance companies must offer coverage regardless of your health status. No underwriting, no health questionnaires, no medical screening. No rejection based on pre-existing conditions. But once that window closes, the rules often change. In many states, insurance companies can review your medical history before deciding whether to issue a Medigap policy. This process is called medical underwriting. And underwriting can become a serious obstacle for older beneficiaries, especially those with chronic health conditions, heart disease, cancer history, diabetes, kidney disease, neurological disorders, respiratory conditions. the very conditions that often make comprehensive health care coverage most valuable. Ironically, the people who may need Medigap protection the most are often the people who face the greatest difficulty obtaining it later. That reality surprises many retirees. They assume Medicare works like many other programs. Enroll whenever you want, switch whenever you want, upgrade whenever you want. But healthcare coverage often doesn't work that way. And that's exactly why today's topic is so important. Let's consider a hypothetical example. John is 78 years old. He lives in Ohio. He enrolled in a Medicare Advantage plan several years ago because it included prescription drug coverage and lower monthly costs. At the time, it seemed like the right decision. And for years, it worked reasonably well. Then life happened. He developed diabetes. Later, he experienced heart problems. Eventually, he required ongoing specialist care. Now imagine John decides he wants to move back to original Medicare and purchase a Medigap policy. Under normal circumstances, he may face medical underwriting. That could make obtaining coverage more difficult or more expensive, or in some cases, impossible, depending on state rules and plan availability. But what if John's Medicare Advantage plan is terminated? Everything changes. Suddenly, he may qualify for what is known as a Guaranteed Issue Right. That phrase may sound technical, but its meaning is powerful. Guaranteed issue means the insurer must offer coverage. No medical underwriting, no denial based on health conditions, no penalty because of prior diagnoses, no surcharge because of pre-existing illnesses, no rejection because you're older. The insurance company must treat you like any other eligible applicant. For someone like John, that opportunity could be worth thousands of dollars over the course of retirement. And that is exactly why Medicare Advantage terminations matter so much. Not because plans are disappearing, but because those terminations can unlock opportunities that are normally unavailable. Now let's discuss why insurers are leaving the market in the first place, because understanding the cause helps explain why these terminations became so widespread in 2026. Several financial pressures have converged at the same time. The first involves prescription drug costs. Prescription spending has increased significantly over the past decade. But one category has attracted particular attention: GLP-1 medications. You have probably heard some of their brand names, drugs originally designed for diabetes management that later became widely known for weight loss treatment. Demand has exploded. Healthcare spending associated with these medications has increased rapidly, and insurers have had to incorporate those costs into future projections. The second pressure involves changes introduced by the Inflation Reduction Act. Many provisions within the law were designed to improve affordability for beneficiaries, and in many respects, they do. But whenever costs are shifted away from beneficiaries, those costs must be absorbed somewhere else within the system. In many cases, insurers have been required to assume a larger share of financial responsibility. That has affected profitability calculations. The third pressure involves reimbursement changes and federal payment adjustments. Again, this is not inherently good or bad. It is simply part of the financial environment insurers operate within. When companies evaluate future profitability, they examine all of these factors simultaneously: healthcare costs, drug costs, government payments, enrollment trends, administrative expenses, projected claims, and when those calculations become less favorable, companies begin making difficult decisions. Which counties should we leave? Which plans should we terminate? Which markets should we prioritize? Those decisions ultimately produce the 2026 contraction. So what should beneficiaries do right now? First, don't panic. A plan termination is not the same thing as losing Medicare. Let me repeat that. A plan termination is not the same thing as losing Medicare. Your Medicare eligibility remains intact. The question is how you choose to receive your coverage moving forward. Second, identify whether your plan termination created a guaranteed issue opportunity. This step is critical. Many beneficiaries mistakenly focus only on replacing their Medicare Advantage plan. They never investigate whether a Medigap opportunity exists. That can be a costly oversight. Third, contact your local SHIP counselor. SHIP stands for State Health Insurance Assistance Program. These counselors are not insurance salespeople. They are not brokers. They are not trying to earn commissions. Their role is education. And for many retirees, they provide some of the most valuable assistance available. Fourth, compare all available options, not just Medicare Advantage options, all options. Original Medicare, Medigap, prescription drug plans, provider networks, out-of-pocket exposure, long-term costs. Many retirees compare premiums while ignoring potential healthcare spending. That can create misleading conclusions. A lower premium does not always mean lower overall costs, and a higher premium does not always mean worse value. The goal is not simply to minimize today's premium. The goal is to optimize your overall healthcare protection. Now let's talk about what may happen next, because many viewers are wondering whether 2026 represents a one-time disruption or the beginning of a longer trend. The truth is that nobody knows with certainty, but we can think in probabilities. The first scenario is stabilization. Insurers adjust pricing. Markets adapt. Profitability improves. Plan availability expands again. Competition returns. This is certainly possible. Healthcare markets are dynamic. Conditions change. The second scenario is continued consolidation. This is perhaps the most likely outcome. Large insurers maintain strong positions. Smaller insurers struggle. Rural markets remain challenging. Choices become more concentrated. Beneficiaries continue seeing fewer options than they enjoyed several years ago. The third scenario involves further contraction, additional exits, additional terminations, potential regulatory intervention. Greater pressure on underserved counties. This outcome is less likely, but cannot be ruled out. What matters most is not predicting which scenario occurs. What matters is remaining prepared regardless of which scenario unfolds. Here's the bottom line. The Medicare Advantage market experienced its largest contraction in more than a decade. Approximately 2.6 million Americans were enrolled in plans that were terminated for 2026. Most headlines focused on the disruption. Very few focused on the opportunity, and that opportunity may be the most important part of the entire story, because for many beneficiaries, a plan termination creates access to something they may never receive again. A guaranteed issue, Medigap Right, a chance to obtain supplemental coverage without medical underwriting, a chance to secure broader protection, a chance to reduce future uncertainty. But opportunities like this do not last forever. Deadlines matter. Enrollment windows matter. And once those windows close, they may not reopen. That's why awareness matters. That's why understanding your benefits matters. And that's why we're here. I'm Michael Bennett. This is Retirement Watch, helping seniors understand their benefits. Thank you for watching. And remember, the more you understand today, the more prepared you'll be tomorrow.